And good morning, and thank you for joining the webinar this morning. It's referred to as the Art of Collection Excellence. And this morning we do need to, or I'm going to cover a disclaimer first. So if we go to the next slide, please. And the disclaimer essentially is, so today this event is being recorded and will be used for promotional purposes. As attendees, you'll receive an email with the link roughly about 48 hours following the close of the discussion today. And if I could ask or let you know that you can submit questions throughout the webinar today. That being said, I'll cover the questions with the panelists at the close. So in our agenda, we do have time that we've reserved for Q&A. And by chance, if we have more questions than time, and certainly we will be circulating the Q&A in addition to the recording following the discussion. So without further ado, we'll move into the next slide, please, and where I will look to have our distinguished panelists introduce themselves, and I am going to pick on Mike first. So Mike, if you'd like to do a bit of intro about yourself and perhaps some headlines briefly about Oracle.
Sure, appreciate it, Kevin. Mike Stoutenberg, I'm based out of Atlanta, Georgia. I've been in the financial services industry for the past 30 years, 19 of which has been in the software industry. I've worked for various different financial companies such as Ford Credit, Mercedes-Benz Credit. I've set up indirect programs for credit unions and banks. So I've dabbled in collections, and certainly our software that I support at Oracle is a collection system. We have a lending and leasing system that supports origination, servicing, and collections. And specifically today, I'll be referring, at least my knowledge, from the software industry from a collections point of view.
Mike, thank you. Again, thanks for joining this morning. How about Scott? Mr. Reinhardt, would like to turn the baton over to you, please.
Thanks, Kevin. Yeah, Scott Reinhardt. I have over 3 decades of experience in consumer finance and banking and insurance at HSBC, and I hail from New Jersey. Mike, I want to make sure I told you where I'm from. And over 8 years of experience in business process outsourcing. I've been with Alorica for a little bit over a year, and I don't know if you know much about Alorica, but it's the largest BPO, privately minority owned. It is we have representation in 18 countries and over 100,000 employees. My role there is to partner with our existing BFSI clients and find solutions to meet their staffing and technology needs.
Scott, thank you, and again, thanks for joining. And last but not least, Jason.
Hey, thanks, Kevin. Thanks for having me. Jason Smolars. My current role is Chief Member Experience Officer with We Florida Financial. Actually, just recently started. I'm in sunny South Florida right now, so absolutely loving it. Like the others in the business for over 3 decades, all operational roles, any aspect you could imagine of loan servicing. So I'm going to focus on the people aspect today. Of my 30 plus years, most of it was with Legacy Household HSBC as well, 19 of the 30 plus years.
Jason, thanks for joining. And I'm not sure I'm going to let you get away with just the people aspect of it, but we'll see how this goes. All right, let's just for the audience, we've got around 45 minutes of discussion, which the panelists will really be contributing to their secret sauce that they've experienced in their tenure of supporting collections and operations in general. With that being said, we do have a couple of poll questions that we'll be asking you to participate in, and you'll see those questions come up on the slides as we move through the discussion. By and large, most of it will be panel discussion. And again, feel free to pose questions. Those questions will be handled in the end of the discussion. So without further ado, let's go on to the next one and just really cover essentially what you should expect to learn today. and I believe that has been socialized prior to the session. By and large, we'll be speaking about some cutting edge technology and how that technology can help in loss mitigation and combating delinquency. There are processes that our colleagues will be sharing on what works well, what they found in leveraging collections, and also governance. And there are some nuances in technology that can be adopted in collections, such as scoring and helping in your workflows. So there's going to be a lot of information shared today, and so let's crack on. Next slide, please. As we all are painfully aware, I think many of the folks on the call understand lenders are experiencing obstacles on pressure, whether it comes to OpEx or revenues. The customers are also feeling it, and we'll get into some of that industry data in just a minute. There's certainly technology in the marketplace. Frankly, it's hard to stay on top of all the current technology. That said, we've learned, and we'll cover into it, some of the technology is quite dated, and there's ways in which you can advance yourself by leveraging some of that technology. And we'll take an understanding of what's happening in the industry. We'll cover that in just a second. So next slide, please. Okay, some of the key stats that I just wanted to share with you all today. And most of you are aware of these stats. So cost of living continues to go up when you compare 20 to 23. It's up just shy of 19%. Big pain points which contribute to that with delinquency are higher. And credit card usually a leading indicator for delinquency in other portfolios. So card delinquency is up close to 34% from 20 to 23. And the consumer debt is under pressure. It's up now in surplus of 17.3 trillion. Some more data in the next slide. We've got, the consumers are walking a tightrope. So in surveys and analysis that's out there in the marketplace, 62% of the consumers have shared they're living paycheck to paycheck, 62%. So that's the majority for sure. Consumer savings has been dropping. It's down, the data shows 63.5%. Job growth is stagnant, if you will. And frankly, it's down from 21 to 23, fairly substantial. And something I found interesting coming into 2024, looking at consumer behavior, they certainly have taken advantage of the buy now, pay later in their shopping experience. And that is increased 32% from 21 to 23. I found that interesting, certainly from a collections perspective, which is impacting, our ability to collect. We're going to see some other points, staffing challenges. So, attrition is a pain point, has been a pain point, but frankly, it continues to be a larger pain point, and it's quite costly from your P&L perspective. Just replacing that salary increases it by 33%, not to mention how it impacts your overall performance in your portfolio. Some pressure points in certain verticals, student lending, because of all of the changes that are happening in the student lending vertical, service levels are under significant pressure. Wait times have increased with the consumers calling in, trying to understand where they fall within eligibility, and with that have been created a fair amount of delays in processing. And so that's put a lot of pressure specifically on the student lending section. But that can be solved, and we'll get into some ways in which that can be solutioned, whether it be technology and augmenting with other resource support. And last but not least, compliance is ever changing. So the regulatory complexion continues to increase. And really the question that you all need to look in yourself in the mirror and say, are we ready for it? And if we're not ready for it, will we be ready for it? What are the things we need to put in place from a technology perspective, from a process perspective, and frankly, just from a procedure perspective within your own remit? So things you want to be asking yourself. Okay, I think we have another piece of information that was kind of alarming for many, and that is showing that of the technology that most have, two things. It's quite dated by and large, 30 years old. Technology certainly is, a big investment. So you're getting your tenure out of it. That said, of the technology, it's fair to say that 10% of the lenders are underutilizing the technology that they had or have, and we'll talk about ways of tweaking that on a go-forward basis. Next slide, please. Okay, so here we're going to start out with a poll. And on the screen, one of my colleagues will bring up the poll. It'll be a live poll. And so we're asking you, if you would, to participate in the poll. And we'll pause just for a few moments. We'll see the results. And so really, it's around, what are your biggest challenges for collection management? Is it staffing attrition? Is it legacy technology? Is it data availability and insights? Or is it customer contact? Those are some big four questions that we're keen to hear from you, and where your challenges might be. And you're welcome to pick more than one if you have. It's not uncommon to have more than one challenge in your remit. And so I'll pause for a second, looking for some participation. All right, so customer contact is by far the biggest challenge. So 60% of you who participated said that customer contact is a challenge, and we'll get into some solutions on how to overcome that challenge. And then staffing is next, and then technology and data. So these results, frankly, don't surprise me, and I'm sure they don't surprise our distinguished panelists who are participating today. I can see Mike shaking his head like, absolutely not, completely agree. So, all right, let's close out of this poll, and let's crack on. Go to the next slide, please. I think we covered this as a poll. All right, very good. So we're going to get into a discussion with our panelists, enough of hearing from me. And this is where I'm going to be picking on my colleagues for some insights. And Jason, you teed me up when you shared you're going to be talking about people. And so let's talk about agent attrition. And I'll give you the headlines for that.
I kind of get why it wasn't the highest percentage. Everything up there is probably on all of our minds here today. Again, as the operator on the team and the people person, to me, this resonates really well, because it is, think about how much the game has changed since COVID. Has completely disrupted your stable workforce. Maybe you're fully remote and it's been an advantage for you. Maybe it's been a disadvantage. There's of course pros and cons, hybrid. If you're in office or hybrid, maybe you've lost good employees to fully hybrid companies. It's not a matter of, I want to leave this organization because I can make a buck or two more an hour, but I don't feel like driving 30 more minutes a day. That's been eliminated. So it's made things really difficult for attrition. That's why I think it's a huge threat. Some of the solutions that my team has been able to implement to kind of combat that people threats and agent attrition is a few things. Whether you're in office, hybrid, or remote, it really doesn't matter. The important things to me is employee engagement. When you have engaged employees, you're keeping them engaged. They tend to stay. To me, your frontline management team is probably the most critical and often overlooked portion of people, because they make or break the employee experience. So I would definitely ask everyone on here today, take a look at how you're communicating the key results of your employees. Do they understand what they are? Do they understand how they contribute to them? Have you replicated, if you are hybrid or remote, all the activities you did when you were in the office. I do it through chat in a remote environment I was in. I'm in an office now. Do it through chat at all levels, communicate just to keep people engaged. So I think that's just so absolutely critical to do that. And then the other big piece is segment your work. Make sure your new hires are doing the easiest work. A lot of us are in here because of collections. So whether you use a BPO, third party, first party servicer, make sure your new employees are doing the easiest work, you're hiring right, and you have a career path internally, just as long as you can keep on pushing people along, re-engaging them, teaching them new skills. You want to align your most difficult work, the work most important to your organization, with your most skilled in tenure people. And if you stick to that, I think that will really help lower attrition. And that's my thoughts.
Jason, thanks for those headlines. And so I'm going to turn the baton over to Scott. Scott, you mentioned you're 100,000 plus from a people perspective, and that's quite an accomplishment to achieve. That being said, you want to guard against attrition. So if you wouldn't mind sharing some of the nuances that you all have implemented to mitigate that risk.
Yeah, I think one of the things as a large BPO that we bring to the table is scale, right? So we put people through an engine, through a process from recruit to retire, right? With all the key components touched off along an employee's journey. And there's a big focus on advancement and, professional growth through that journey. The other thing that I think is important is our breadth and depth in understanding the markets in which we play. At 200 with 18 countries served, we've got a lot of market data. So the pressures of labor price increase is real. And we're kind of first to kind of see that and understand that because we've got significant presence in those markets. So if you're a smaller shop, you may not be able to react as quickly to what's happening in the marketplace. And then lastly, a happy agent is one that can do their job well. So giving them the tools and the training to get there. We are very proud about how we are able to accelerate speed to proficiency when we bring new people on board.
Thank you, Scott. I'm going to peel it back just a little bit more. I know in our previous conversations, you mentioned about the discipline applying the right people. You want to give a little added color around how you go about doing that?
Yeah, and I think it starts with our clients, making sure that they're providing us with the background and the job requirements or the stats that they need for that position. But I think it's also we've got a whole TA department in all these markets that are identifying not only the best candidates but sources, the ways in which we bring them to the table. And then once we bring them in, it's all about the training and using some of the digital training techniques that we have through role playing, what have you, to make sure their speed to proficiency and performance is good.
Yeah, thank you, Scott. Mike, so some of our distinguished colleagues talk about the ability of routing work to the right resource and skill set. What type of technology do you, from the technology sector, you mentioned in your onset that there's some capabilities, and why don't you describe a bit about that, if you would, from a workflow perspective? Yeah,
from a workflow perspective, Jason kind of hit on this as, given the experience of a young collector, giving them the easiest, to work, to get familiar with the process, within software, within technology, most, are role based. And that could be a junior collector, a senior collector. It could be, various different roles, ones that handle bankruptcies or repossessions, or, getting the account to the right people. And, with our software, it's based on responsibilities, and configuration is definitely key. Nobody wants to spend, time and money to develop those things, technology, leverage technology, current technology to get the count to the right people so that it can be cured effectively. And that's something that we do. I know others do that. I think it can't be understated, especially when you have a large delinquency problem, is finding ways to cure those accounts and with the right people.
Yeah, thank you. And just to tease that out a bit more from the Oracle perspective, let's talk quickly about the integration capabilities or the ease of integration. So there's each one of the lenders or agency, collective agencies, they're going to have different tools in their toolbox to try to offset and manage best performance. How difficult is it to bring in the solution so those tools can be seamless to the people getting the work done?
Well, first off, 2 slides back, and you don't have to go 2 slides back before the poll. Technology that's out there today, being 30 years old, there's in this title, the biggest threats. I think with a lot of financial institutions, the threat is implementing a new solution. It's disruptive. Whether you're doing integrations right now, you have outdated tools, or some have outdated tools. And so you got to weigh the pros and cons. Do I bite the bullet and change my system, or do I continue the path that I have right now and try to integrate to my older technology? It's much easier to integrate to newer technology. I mean, that's kind of the obvious thing. But we've seen financial institutions, look at, good newer technology to wrap around legacy technology. That only goes so far.
Yeah, fair enough. Okay, so thank you for that commentary. Let's move on to the next slide. And in the next slide, we're going to dig into really, some of the bigger pain points that was part of the survey, and that is, customer contact. And so there's various tools in which you can meet the customer where they are. And I'm going to ask Jason to lead that discussion. And how do you go about enhancing your customer contact? So Jason, I'm going to hand the baton to you.
Yeah. I alluded to it on the last topic, but in terms of kind of skilling your agents, the comment of the newest employees working the easiest accounts, that's all about scoring and segmenting your loan portfolio. Something you could do within a system like my buddy Mike, or with your internal risk or data analyst group. And a role I had not too long ago, we had to do that very challenge. We made the business decision to segment and move the lowest risk, easiest functions offshore through labor arbitrage benefits. It was a great benefit to help us become more profitable, but we had to make sure that it was the easiest, lowest risk accounts, and we did that through a dynamic scorecard that we built internally. There's several vendors that can offer you help with that if you're interested and don't have that today. And the benefit of that, again, is that our outsourced company was working the lowest risk accounts. Our new hires internally were working them, and then our seasoned staff was working the most difficult accounts. It worked extremely well. It helped improve employee engagements, because often our highest attrition were those entry level jobs into the front end or dialer environment, like most of us on this call probably have. And the scorecards that we used updated twice a month. So this is very dynamic information. Someone stops paying their bills on their credit bureau, regardless of where they stand with us, we're rescoring that from from low to either medium or high risk. And that was foundational in improving the results.
Jason, I'm going to push on it a little bit more. So thank you. I've heard agent skilling, dynamic scoring, and you mentioned the dialer, and there's some other ways in which you engage with the customer. Would you give some insights on that overall engagement experience to hopefully somewhat mitigate the customer avoidance, if you will?
Sure. Most of us probably text and email customers and make phone calls. And where I had great success, something I probably wouldn't have even been a fan of with a hefty price tag 10 years ago, in the middle of your screen, omni-channel. All of us, if we text and email, we have response rates and we think, okay, this is good. Really, until you have full omni-channel. And what I mean by that, integrating those different contact channels into your CRM or the collections interface that your agent actually communicating with the borrower. Once you connect those together, the reality is we might be sending out thousands of texts at once or emails, and maybe a certain portion of them are going to respond at once. Well, if we don't have a agent immediately able to engage when the customer is ready to engage, the simple truth is you're not going to reach the full potential of your contact rates, of your payment rates, your loan servicing, customer service resolution rates. I had to do a basically mock-up of it as a test to better understand the ROI when prioritizing the omni-channel project. So we did something really simple. We just had people man constantly the inbox for our email provider as well as our text provider. And when we could immediately engage, that's where we saw a true lift in our ability to improve collections. I would encourage anyone that isn't down an omni-channel path to definitely do that.
Yeah, thank you, Jason. That's quite helpful. I'm going to turn to Scott now. Scott, I understand through your solution group that you're able to do some pretty extensive QA automated monitoring and how that then enhances outcomes and performance. Could you give some color around that, please?
Certainly, Kevin. Thank you for that. Yeah, so I think the technology is advancing at a pace that is really exciting. And, with all the capabilities of taking speech and turning it to text and analyzing it, we have a whole, team that is focused on analytics. We take that information, we can actually build scorecards that match the quality scorecards of the organizations we're serving, and automate a lot of that review. So it's twofold. One is it becomes a non-biased review because it's a little bit more rules driven. Now, it's being 100% quality review is still a challenge, right? Because there still is some human intervention that needs to kick in and kind of maybe assess. But through machine learning, we get better and better every day. But also in the old days, it's all about sampling and sample size, right? But in the digital age, you can do 100% of quality reviews and really, feel good about the total depth of the review that you're doing today.
Yeah, fair enough. And I've experienced that myself. And frankly, the people enjoy a better sample size because, as you say, back in the old days, it was a sample size. And, when you're creating incentive and performance management on the folks who are getting the work done, that you're doing 10 calls a month and it was, one was a disaster. So this allows a wider sweeping review of the person's contribution and their success.
Correct.
Thank you.
Well,
we'll move on to go ahead, Scott.
I was going to say, as well as identifying trends across the entire agent base or outbound call base, right?
Yeah, so having those trends and then dissecting those trends and being able to redirect or reinvest your efforts into better outcomes is certainly critical because every account matters in today's world. Next slide, please. Jason, you'd mentioned about meeting the customer where they are, and I know just from working with you in the past, you've got some tricks up your sleeve on self-service options. Would you want to give the open your kimono and share some of those tricks with the audience, please?
Yeah, absolutely. I think a few things that has served me well in the past is your IVR fully capable of taking payments, and it all depends on the organization's appetite. In the example where we did the omni-channel full blown, it was auto collections. Even if the customer's out for repo, we'll take a payment. We'll take it over the IVR on our website, our customer app, over the telephone. We text with a link, because through automation, it's not as tricky or complex as it used to be with the technology, or at least I like to dummy it down. APIs allow really quickly for us to pause a repo when a payment hits our system. I know not everyone wants to do that, but even if it's not out for repo, if you're giving your customer as many options to pay as possible, and to me, key is through text, because customers, of course, don't like to talk to collectors. I think that's where we saw huge success. And then even an agentless dialer, I was skeptical at first, and we actually even ended up using it with all delinquency ranges. The customer has to be actually verified through the last 4 of their socials, so it's a true right party contact, automated message, much like if you get a doctor's appointment. Press 1 to make a payment over the phone, press 2 if you want to talk to a rep. And we found that they had higher contact rates, higher promise to pay rates, and kept rates than an actual live agent, which is just kind of mind blowing. It absolutely works. And then the self-serve options through email too have been really powerful. Big payments, such as car payments, I haven't seen as much success as I have with unsecured and credit card. It's been extremely, those self-serve options have been very tremendous.
Thank you, Jason. A follow-up question for that. So in the self-service options, do you exercise any strategy on what self-service options are available based on the ongoing and the frequent behavior scoring, or is it everybody has a chance to make a payment?
Everyone has a chance. The frequency of sending out those various contact channels, that would be segment or risk based. Meaning a low risk customer, we wouldn't be firing off as many email, texts, phone calls, etc., as we would a medium or high risk person. But same offerings to everyone, just the frequency would be risk based.
Great. And you mentioned the API, so I'm going to turn to Mike. And Mike, give a little color about the bandwidth of APIs that you have in your toolbox.
Yeah, just going back at, as I hear Scott and Jason talking about, collections, and, when I first started in collections, it was poll cards, and then it was the newer technology. We had a dialer and, screen pops, and that kind of ages me, but, back then it was just about, hoping that they would send in a check. You would wait days, weeks, months, broken promises. But within the digital age, there's so many options out there, from a technology standpoint, that you really need a collection system to have the ability to integrate. Collection systems are there to document, to keep you compliant. But as Jason was talking about in terms of self-serves, what if you have a portal? What if you have some sort of portal for payments? Our collection system that we support has over 600 APIs. So integration is definitely key. We don't limit our customers in terms of who they can integrate with. It's a matter, can we integrate with them? So over the years, we've been building APIs, as technology has, become more and more advanced, our collection system has to be equally advanced to accepting, integrations.
Yeah, thank you, Mike. All right, I think we're going to transition over to another poll, I think, is the next slide coming up. If I got my slides, it is. Okay, so if my colleague can pull up the poll. Okay, so here we're looking to get your feedback on the following technologies that you might be looking to replace and or update in your ecosystem, whether perhaps in 2024. So the top four that have been identified is telephony, your collection system, your loan origination system, or your CRM. And again, you certainly can pick more than one if you're ambitious to going through more updates than just one. So we'll look for your responses. We'll take just a few seconds and then we'll share what those results look like. And my panelists, you can't participate in this. You're not allowed to.
I know which one I would choose.
Yeah, that'd be a surprise, Mike. And once we get the polls back and the summary, we'll headline some of what you have shared. Well, Mike, you have to be celebrating. Collection system. 61% of the folks who are participating in this today are looking to, in their roadmap, to upgrade their collection system. And then the fast follower is the telephony. And then there's a tie between the loan origination and CRM. So it's helpful to understand what our audience today is looking for. They're looking to have delivered in the 2024 initiatives. So, thank you all for that participation. Let's keep that in top of mind as we move forward into the rest of our discussion. So let's close this poll out and go into our next slide. And this is the poll. There we go. Okay. In here, let's dig into a bit. So, Jason, you mentioned about leadership and the importance of paying attention to the leadership team. If you could talk about some incentives. I know you mentioned career paths. I think we covered that, but we haven't really dug into incentives and how you leverage that in performance. So, if you would share that, please.
Yeah, when I think about incentives, to me, it's always been about aligning the incentive program to the key results that the organization is trying to get. It's so critical so that there's complete alignment. Employees understand what those are. So that's about constantly reinforcing and talking about what the company or the department goal is, how you stand against it. Being smart to truly recognize who your most valuable people are. It's an extreme example, but we know the person that works the most hours might collect the most money. And especially if you're in a smaller organization where you might collect multiple buckets, and there could be various degrees of collection. So either segmenting your employees into those easy departments to most difficult, where you have a level playing field. Maybe you stack rank, maybe you have a set goal. There's pros and cons to both. I think it depends on all the variables, of which I recommend, but incentives is absolutely the key. having other components like meeting the department goal or the company's goal and not just individual based, to me is also extremely important. Recognizing your top performers, again, very important. And more importantly is, what are you doing with your low performing people? So it's a term I toss around a lot, is a management operating system. Having a very robust management operating system, which identifies your critical KPIs and all the activities your leadership team does to enforce getting the right results. It's not about having a dashboard or a productivity report with a million, different metrics, but honing in on the few that are most important, but still having more to help tell the story. So if someone is low in their collections, whatever that measurement is, what are the other metrics to tell? Is it a skill issue? Is it a will issue? Or are they just not engaged? And more importantly, if it's a skill issue, what is it? And do you have the right components, to back it up? And are your supervisors keen in identifying it? So a part of my management operating system is, having that monthly review of results, making sure our frontline leaders can articulate who their top employees are, who the middle performers are, who the lower ones, and what does that development plan, look like? And then again, career pathing, continually challenging people, getting them from easy work to more difficult or more specialized work, I think is absolutely critical, and that ties in well with attrition.
Yeah, thank you, Jason. And I suspect as you've moved from organization to organization, you certainly look at, what's the incentive criteria. So if I heard it correctly, you have individual performance, you have perhaps team and or company goal, likely some compliance / quality. That being said, that's the big four. And if I heard it right, you try to make sure that it's easy to understand. It's not overcomplicated. From my past, when I've moved from organization to organization, I have seen where incentives have just had every rule in the book. And the past leader was looking for the incentive structure to manage performance, and that just doesn't work from my perspective. Any comments around that from yourself?
Totally agree. The simpler you can keep it, the better. And we come from similar backgrounds to where, okay, if you weren't getting bonus for X months, you're out of here. To me, it's about recognizing most people contribute to the company's overall success. It's truly that bottom, whatever you want to call it, 20-30%, that's probably a mismatch, or there's the will isn't there, and you would want to help that employee move on and move out quickly. But if all you had was your top people that you focused on, while they do collect the lion's share, you can't forget about everyone else, the folks that will never be number one. That is just absolutely critical. And the compliance component, you mentioned it as well. I always have to have that in some form or another. There's debates over, is it a takeaway or whatever. There's different ways to handle that. Ultimately, at the end of the day, if the employee's not doing the job right, if they're running and gunning, as the whole the old saying goes, you have to have like zero or very low tolerance for that. And when the culture realizes that that's not acceptable, for the most part, it stops.
Great. Thank you, Scott. I know you've got a large pool of people. Just a quick headlines on how you all adapt and or adjust in the incentive space.
Yeah, so the interesting thing with us, Kevin, is we're going to pretty much follow our client's direction. If you think about the BPO, we really are an extension of their operation, even to this extent that the space in which our people work in is branded, the client's brand. I echo what Jason said about routine reviews That's very important. And we get together with our client and make sure we have clear communication with our client to set the expectations and meet the expectations. So then we have weekly business reviews, monthly business reviews, and quarterly business reviews, always honing in on, what's important to them and making sure that we're hitting those metrics.
Yeah, thank you, Scott. And we'll go on to the next slide, but a lot of the conversation, I'm just going to, Mike, get you teed up here. So if we can move to the next slide. A lot of the conversation so far has been around data and having access to data. So Mike, if you could give some insights around, data capabilities, I think that'd be helpful for the folks on the line.
Yeah, data is king. We all know that. I mean, you have to have clean data in order to be, exact in terms of, what your outcomes are, whether that's incentives or whether that's behavioral scoring, whether that's, getting the account to the right people. One of Oracle's claim to fame is a lot of people look at Oracle and they say database, right? Having said that, our technology is database driven. You want to make sure that really anything that is in the database can be utilized. So that you can do behavioral scoring, so that you can do incentives, so that you can track, so that you can, be flexible with your staff and drive specific outcomes or actionable items. Again, data is king, and that's kind of Oracle's mantra is data, data, data. But I can't stress enough is utilizing the data in such a way, not only back end, but also front end, within the technology.
Great. So thank you, Mike. And from my past, I could never have enough data.
Right. You
don't want to die on analysis paralysis. At the same time, you need to be able to make informed decisions quickly because it's an ever-changing environment. So data. I drink that Kool-Aid, so thank you for sharing that. We are getting pressed on time. I have one more thing I'm going to pick on Jason, and that's really around the Champion Challenge. And following that discussion, we'll go into the summary and Q&A. So Jason, could you just talk about Champion Challenge and what you put, how important that is and what you put around that?
Yeah, I really look at it like Kaizen, continuous improvement. You always have to measure, echoing, Mike, data so that you're improving results. But more importantly, if you have a test and control, whether it's one department against another working the same accounts, comparable accounts with the same characteristics, or if you have a third party working your account like Scott over here, the best way to have a healthy relationship is just to have an equivalent test always running, whether it's testing a new strategy or even BAU, test versus control. So instead of, when results aren't what you expect, instead of me getting upset with Scott, I can have that control to say, hey, okay, not only did Scott's team results, miss the mark or go down, but mine did as well. So it's either a bad forecast or it's an external, thing, versus internal or operational. So it's a great way to maintain a healthy, relationship internally or externally, and always test new things. I'm sharing others with this roundtable group that I used to be a part of. One of the large auto servicers shared with us that they would send a repo text to their customers days before they would repo. Please contact us. Your account is going out for repo. And I immediately thought, as the collector, everyone's hiding their cars. This isn't going to work. I was assured there was no deterioration in the locate rate and the average days to locate rates. So I did it. I'm always eager to try something new. Sure enough, the first month, there was a significant improvement in payments and less accounts went out for repo. I always encourage everyone test things over time, not just 30 days. 90 days later, it narrowed. It was about 200 basis points better. So not necessarily a huge win, but it was a huge win with late stage collectors that have the worst contact rate. People know, don't, take my car, I'll pay you Friday. So the staff loved it. It improved employee engagement with our customers and members. The other aspect too, even though over a 90-day period of time, the first couple of times they get the text pay it, and then the third, they're out of money, they get their car repoed. We lowered the deficiency balance because the test group collected 1.5 more payments than the control group. So we lowered our deficiency balance. So just one example of why it's so important, a champion challenger test.
Yeah, thank you, Jason. You mentioned duration. What size of a champion challenge from an account perspective would you say would be sufficient enough?
I tried at least 500 accounts, each population, 1,000 if possible. In some scenarios more. The key is that they're an equivalent test population in terms of their credit characteristics, high delinquency, years on books, all those things that factor into the behavior of the vintage.
Great, thank you. All right, well, I think the discussion is essentially a wrap. Covered a lot, and thank you for your participation and your insights. Let's move to the next slide. So today, really, we really brushed the topics of some strategies, some tactics, and tools that you all can think through how you're deploying in your own businesses. And certainly, there's no shortage. I think Mike had mentioned there's a plethora of new tools that are on the market. You don't always need to have the shiny object to get the best results. It's really making sure that you're optimizing the tools that you have, or if the tools that you have are such a blunt instrument, then it is time to think that through. And through the survey poll, it was quite clear that many of you are looking to no longer have the blunt instrument, but make some investments to manage your portfolio and your outcomes. So it's been a good discussion. We've talked about it. I want to thank the panelists for their insights, and we do have just a few minutes for Q&A, and I do have some questions that actually have come in through this, and thank goodness I wasn't driving the PowerPoint at the same time trying to carry the conversation. So let me just reflect on some of these questions that have come through. What tactics can we use to make sure that our agents are connecting the most important borrower to the next call? So again, the question is, what tactics can we use to make sure the agents are contacting the most important borrower on their next call? I'm going to turn that to Jason.
Yeah. So when I talk about segmentation, for example, if you have, I'll use the extreme as the easy example. If you have customers that always pay on time or never pay more than 15 days late, that's what I mean by that's probably going to be a new hire that hasn't been with the organization, whether it's internal resource or through a BPO relationship. If the customer is very high risk, if you have a tier system or however you decide, they just barely got approved for the loan, or they're paying everyone late, whatever is the criteria of your internal ranking system, that's who you want to have talking to the most seasoned rep. And understand that it doesn't have to be delinquency bucket based, because you could have had someone out for repo, they came up with some money to get their car back, and they're due again 3 weeks later, and they're 1 day past due. So that's what I mean by that segmentation. Just because it's 1 day past due or 5, that they shouldn't that customer should still be worked by a more skilled group. And again, it has to do with that risk rating and your skilled agent through your dialer and telepathy system of, you know, who gets which calls. So even though it's 5 days past due, I would put that to a group that typically works higher delinquent accounts. They're either higher delinquent, so they're with your most skilled agents, or maybe they're not that delinquent at all, but they're high risk because of their prior high delinquency. That's one way I do that.
Yeah, thank you, Jason. Another question that's came through. So Mike, I'm going to throw it to you. And so the question is, what do you think the biggest challenge will be in 2025 for the collection industry? And the follow-up is that, so what can we do to get ready for it? I think I'm going to know your answer, but I'm going to throw it your way anyway.
Yeah. Well, I mean, I think you need to sharpen your tools for one. But quite honestly, you know, one of the very first slides and one of the slides that was running prior to us getting online is regulation. You don't know what's coming down in 2025. Sometimes you have little to no notice of certain regulations, and one of the things that I think keeps certain organizations up at night, especially when you're on a legacy system, is time. Like how much time do I have to be compliant with this? And you know, is my system able to do this? You know, having updated systems, it's going to be, you know, part of the job of the vendor, you know, in this case, let's just say Oracle, is for us to make sure that you are compliant. I mean, that's why you're paying, you know, paying Oracle or whoever it is that you're using is making sure that you are compliant. And if you are on a legacy system where development is needed, you simply might run out of time. And that's kind of the scary part, you know, going in, you know, from year to year. It's that would keep me up at night, and I think that would be a challenge for some organizations. Maybe not all, but you know, for some.
Yeah, thank you. And it's just watching the clock. We are up against the top of the hour. I have several other questions that I'd love to ask, but we're just out of time. And so with that, as I mentioned in the onset, we'll take these questions along with the webinar, and we'll circulate it to the attendees. Along with the questions, we'll look to craft up some responses to these questions so that they are attended to. And just in closing, we'll go to the last slide, if I may. And I just want to make sure that those who are attending, you know, I'm myself at Kevin Ken in operations for 30 plus years, managing director of DecisivEdge, and we are here to help you and take the friction out of your business. And we do that by making sure we partner with the right capabilities. We are partners with Mike and Oracle, so that is a solution we certainly can look to implement if that makes sense to you. But here's my contact information, email information. Please feel free to reach out. And again, thank you to my panelists who have invested time in sharing their knowledge today. I do appreciate that. And I wish you all a happy Valentine's Day. So with that, have a nice afternoon.
Yeah, thank you.
Thanks, Kevin.
Okay.